This is DCarsonCPA MFC on the reporting cycle. We're basically looking at the reporting cycle, which is the work cycle of accounting at work in your business. We're thinking about the period of 1 year, but it could be more or less because reporting cycles may in fact be a little bit different for different businesses. But typically we have a T equals 0 point of a balance sheet. Could be a beginning balance sheet of a business, which is just contributed assets to a business, indentures that are picked up, and then the residual capital. Then we're talking about the pathway within the reporting cycle from T equals 0 balance sheet to T plus 12 balance sheet, which is at the end of 12 reporting periods, which would most typically be your monthly reporting periods, 1, 2, 3, 4, 5, etc. You've got it along the line. And then potentially inherent business cycles. You may have one or more business cycles within your business. That's the process of production and selling and marketing. Some things are driven by cyclical demand. You may have only one season a year, or you may have more than one. So we introduced the concept that around there's also a business cycle related to your business. When we look at the balance sheet, we're thinking about a tool that represents your assets, your liabilities, and your owner's equity. Your asset are the things you own. Your assets are the things you own, like your bank account, contributed equipment, and value of inventory and other type things. Your liabilities being loans undertaken. Capital structure being relevant to the structure and formation of your entity, sole proprietorship, partnership, small company with shares or a large company with shares, stockholders, and all that good stuff. We're looking from period to period, and this is kind of a brief map. It's not all 4 statements. You have 4 statements in totality, but these are 3 primary statements that embed the reporting cycle and talk about the economic value as per the balance sheet snapshot and how that value moves from point to point in the economy and financials. Your P&L is benchmarking at these 12 points as you have an updating balance sheet at each of these reporting points. The P&L or your income statement deals with revenues, which is your goods, your services and goods, or your services which you sell, the lines for generating income, and the expenses, which are the cost of labor, the cost of insurance, the cost of utilities, of technology, of transportation, and many relevant elements like the purchase of raw materials, depending upon the type of your business, which go to work in generating revenues for your business. The income statement is a snapshot of how value moves along those lines. It may draw down or increase value within your balance sheet during the period from end to end. And the balance sheet will in fact update at each of these 12 points, but we're really looking at the reporting cycle of 1 year from the start date of the beginning of your entity or the new year of your entity through to the next reporting cycle. Could be for audited financials, could be for taxation, for compliance, and certainly for the management look of what's happening within your business from end to end in the period and how our skills can help to work with financials, with compliance, with technology, and communication strategy to help the performance lines embedded in your business here. Next up to the line, the cash flows. Because there's more at work and at play within your balance sheet, it's not just the revenues and expenses, but it's financing and operating, investing, and financing activities that correspond to use of funds or acquisition of funds for your business. We have this other very critical statement, the cash flow statement. Operating income to your business, operating inflows really, in your cash flows could be from revenues coming in or expenses going out, which would be an operating outflow. Investing activities, perhaps you've purchased computers over here, you financed them, you didn't pay cash outright because you knew there'd be a period of economic benefit, so you could have some investing and financing of equipment in there. And the financing lines here are considered traditional financing, where it's the raising of debt for your business, issuing of loans and those type of issuing of debentures for your business, or equity capital lines in here. You maybe went out to market, you raised some shares, so that was a financing line to bring cash flows into your business. Or if you repurchase shares, you basically contracted a bit on those lines, so that's outgoing from the financing lines. I'm Dean Carson. This is the framework for a reporting cycle. It's not an in-depth introduction, but we certainly have plenty of lines on GAAP, tax, IFRS, ACBOA, which is other comprehensive basis of accounting for regulatory reporting as needed in your sector, and for the lines of management reporting, which is an important line about connecting costs and drivers within your business. All of this has behind it the human capital, I like to call people power potential, at work in your business from period to period, the technology lines, and how it all comes together, financials with compliance, with data, and with technology lines. DCarsonCPA MFC is about the lean project, process, and advisory lines to help your business. That's project management, business analysis, process engineering, and advisory skills in the CFO controlling lines to help your business and performance in the reporting cycle. You're thinking about the financials as a strategic map to your business, what's embedded in them, and not only about the financials, but data lines that travel along with them, needs on risk plus cybersecurity, and the many global needs of your business. DCarsonCPA is a line of global financial decision-making research. It thinks about your entity in relation to the broader economy, which is around the circumference of this hall, and how you connect to that economy and how we can use that knowledge to help on performance improvements. I'm Dean Carson. We hope you drop by the lines of DCarsonCPA and DCarsonCPA MFC. Net, we're here to help your business to grow and meet new opportunity lines of growth, efficiency, and improvements in the economy and financials. Thank you.